Welcome. You've just entered the trading pit, your home for sophisticated takes on the crypto markets. It's April 9th, a new week, and here in the studio is JJ and Ben Lilly of J Labs. I am your host, Mark Coney White. And man, after a sojourn towards the low 60s, Bitcoin is back above 70K, while ETH and Solana are also up. We're going to unpack the price action, but first, it's rapid fire, where I look for simple answers to complex questions. Let's get started. Ben Lilly, let's kick it off to you. Raoul Powell says that the rich and fabulous will store their wealth in art. Is it going to be TradFi or NFTs?
TradFi.
TradArt is what I meant to say. My script writer is going to get lashed for that. So you think they're going to stick it in Jackson Pollock and Monet?
You know it.
Oh, okay. All right. Gonna be a heartbreak for all those punks out there. JJ, U.S. Representative Josh Gottenheimer has traded nearly $40 million worth of stocks on 559 trades over just the past year. My question for you, should we reban insider trading or just make it open to everyone?
I'd take this a step further and say send everybody guilty of it to maximum security prisons.
Oh. Well, I think
to
Josh
be some
is going
kind
to
of
be
punishment for making 40 million worth of trades as a U.S. representative. There's got to be something steeper than the current
I've got a lot to say about Josh, but we'll have to take that offline. But maybe he can join Martha Stewart and they can learn to do some crafts. Ben, You have to ape into one, Pendle or Ethena. Which one?
Ooh. I mean, to do 559 trades, I think I'd have to need Pendle for that one. And also a mobile app to be able to execute trades as I walk between meetings.
Okay.
Impressive.
So now you want to be able to do it on the run as you're moving between your inside trading pods across the Congress campus. So there you have it, folks. You can figure out how Ben's going to be trading the inside stuff. JJ, is it dogs, cats, or politicians battle royale? Who wins the meme battle?
Dogs are the most, Lindy, that's for sure. But this Bowden thing's funny. Not saying buy it now. It's almost at $1, but I don't know if I've ever seen a better meme than that. So I think that's the best meme, but over time, dogs.
Okay. Dogs for the win. We know what they mean for humans. All right. We got the last one here. Ben, Peter Schiff will stop complaining about Bitcoin when Bitcoin finally flips gold's market cap. True or false?
False. Well, he's trying to get that attention and he'll never stop. So he can't.
Oh, man. I don't know if anybody has been more wrong about any call ever in his life. I mean, this guy could probably get a sportscasting job now that gold at some point is going to be done and dusted. All right, let's move on to some actual topics here. Welcome, everybody. Love to see you in the chat. Definitely hit us up with whatever questions are on your mind. But today we're going to start with what we already kind of covered, which is Ethena Labs, which has rocketed on the scene with what I'm calling a stable coin. Ben may correct me, that offers sky-high yields. I think I saw one up to 58%. And when I was reading the documents, it really started off focused on the native yield of Ethereum using the staked yield and then running what I was calling a basis trade. The protocol has already amassed 2.3 billion in TVL, and it's a favorite of Arthur Hayes, who's an early investor. And just over the last week, it announced that it plans to onboard BTC as a backed asset. So, Ben, how is Athena impacting the market for ETH staking, and what might bringing on BTC mean for the markets at large?
Yeah, a lot to unpack there. Ethena is a very interesting product that's coming to the market. It's a structured product, right? This isn't necessarily kind of really what it's being advertised, which is a stable coin. And they say it's a synthetic dollar, but this is really just a structured product that offers yield to potential investors in their, what they call the synthetic dollar. Now, when it comes to, man, there's so many ways you can kind of start it off here, but with Ethena, what's really exciting is just the ability to try to get yield and offer it and make it available to people. But right now, it's attracted so much attention that anybody that really has staked ETH in any capacity has gone ahead, handed it over, and then Ethena goes around and basically puts a short on in the perpetual futures market. And in return, the holder of that synthetic dollar can go ahead and try to get shards, I think is what they call it, for points, and they can get the yield that they're already getting, which is very attractive. And so there's trade-off that exists, right? So now you're short, upside movements on ETH, but you're getting yield plus this, as I like to frame it, this mystery box of points, which, could be equal to the upside of ETH potentially. Right. So that's what's going on in the market. People are eating it up. People want points. And so this product has really captivated the market.
Well, it's a very fascinating product because we've had so many products come on the market in the last couple of years, really with the DeFi craze, and thinking about the points, thinking about some of the product or the trade that's being run behind it, and then seeing BTC come on it. I think there was, for some market participants, they heard this and they thought Terra Luna, right? They thought some kind of protocol that's trying to buy up a bunch of Bitcoin that at some point is going to get nuked. What is your take there, Ben? Is there a similar risk profile with the way that Ethena is going to be running this trade with Bitcoin, or not?
I'm not sure why it's drawing that parallel. Possibly because people are saying that it's going to be backed by Bitcoin, and so the thinking there is that there's this treasury that's going to go ahead and maintain this peg, but that's not how this works. They're using Bitcoin because there's a really big market available. The ability to put the cash in, carry trade on Bitcoin is very, in terms of market size, is large enough for what Ethena is trying to do, because it's put on. I saw a stat, and I really can't find it at the moment, but it was like 20% of all short open interest sits from Ethena, right? So people trying to go ahead and earn that yield on that synthetic dollar, like the end result is that 20% of all open interest on the short side is because of this. And so now you need to go ahead and look at other markets to go ahead and put the same trade on to go ahead and eat up that yield. And so Bitcoin's a massive market, great liquidity. So why not go ahead and add Bitcoin as your kind of possible basket of assets to go ahead and earn that yield in kind of this, I think they even call it a bond, which makes more sense than a synthetic dollar, just essentially attached to that $1 value. But
so Ben,
I don't understand the parallel go back to your original question.
All right, well,
PTSD. People.
Yeah,
people
I was going to say.
They think
it's not trying to get a treasury.
The hedging dynamic, people are they take it at face value and think they're just stuffing it in a treasury the way Luna did.
Yeah.
And it's not using a governance token to use as collateral to go ahead and maintain that peg either, which is, that's really the negative feedback loop that was created in Terra Luna.
I think the biggest risk to be aware of there is just exchange risk. Like they obviously have a lot of collateral on exchanges. So if any of the exchanges they use, that's kind of your tail risk with Ethena. But other than that, it's a covered product.
They're very open about it, like how they've set up and laid out that whole infrastructure. And, they try to be realistic about the risks that exist in the market. The team is just trying to, really let people know, like there's only so much that you can technically do fully on chain at the moment. And a lot of liquidity exists on centralized exchanges, and they're just trying to develop a product around that. And they're doing a good job, in my opinion, of trying to remain transparent on that.
Yep.
So Ben, last question before we move on to other topics, but with Ethena, how is this going to impact the long-term yield on Ethereum? Do you see it capping some of its upside? And you mentioned 20% short is being placed by Ethena on Ethereum. Is that also going to have an impact on Ethereum's price? The most hated trade in crypto right now.
There's definitely a lot of dynamics that we should be aware of that Ethena is going to create within the marketplace. This really goes back to essentially the merge, when kind of this native yield of Ethereum was really created thanks to proof of stake, so that anybody could really go ahead and get it. And because that there is this native yield, you can go ahead and design all these products. I think one of the earlier ones I saw was from Ribbon Finance, which was, I thought, really great. And they went ahead and took the yield of staked ETH, and they would buy upside calls. But I think they were doing this in a bear market, so there wasn't much interest, and they couldn't really attract a lot of usage. And Ribbon Finance has since pivoted to Avo, I think. for an options exchange. But those products, which here we're seeing Ethena do something similar, are what are going to keep coming around. These are just structured products, and they had a lot of success because it's kind of being marketed as the stable coin, the synthetic dollar. And with these yields and these points during the points craze, they just timed it up really well. And I do imagine there's going to be additional structured products that come out that are going to be comparable to this. This is not going to be the end. And as far as what it's going to do to staking, it's definitely going to go ahead and squeeze the yield that exists on Ethereum. And we see that a lot of developers in the Ethereum Foundation are starting to see this. It's starting to creep higher. And I don't think it's going to really slow down anytime soon. This innovation is just going to speed up as people see it. As a lot of the on-chain infrastructure continues, those yields will continue to get squeezed, but the market will try to go ahead and seek out additional yield. And what we're finding, which is kind of what's really important here, is that we're getting closer to sort of this risk-free yield, if you will. And as each product gets created, it's going to be more defined. And so now lending and borrowing markets are going to get even more liquid, and you're going to be able to have under collateralized loans become kind of more realized in the market than they currently are. I think Gearbox is one of the few that do it right now, but it's just the maturation process.
Okay, so more innovation to come, and maybe as a sort of stage 2, based on all this yield, we're going to start to see some products that can last multi-cycle. So Ethena is definitely one to keep an eye on. You just mentioned a few more. So something exciting here, and I think it's always interesting if Arthur Hayes is involved. Yahtzee, he gets us all excited. All right, let's move on to some of the most hated.
Real quick, Marconi, because I do want to point out one thing. We said interesting market dynamics before we move on, is that when this starts to unwind, at some point, this is going to be trading for you're going to have to buy it for, say, $1.02, and then you're going to hopefully get $1 return out of it, which is going to be negative yield as these shorts start to get unwound. And the market dynamic that could take place is that as shorts get lifted, right, that allows price to rise a little bit. So if you're going to have billions of dollars of shorts start to get unwound, as the market is getting soft, it's going to almost elongate the market cycle itself. So something to consider in the late stages here.
Yeah, that might be a good top signal. Keep an eye on.
Well, I feel like we're talking about things that are months down the road. So everyone who's out there, make sure to put that on your calendar. We're going to be looking for the top signal about 6 to 9 months from here. Speaking of which, I want to give a shout out to KS, Adrian, Gabrielle, Jordan, Preet, Paul, Reg Domain, Hello World, and Light Signature. Welcome. Thanks for joining us here this morning. Definitely hit the like and subscribe button. Share this with everyone you can who wants to have a sophisticated take on the market. But I do, JJ, I want to talk about the most hated trade in crypto. We were just talking a little bit about Ethena and what it's going to mean for Ethereum. And right now, if you're on Twitter, everything is going to be around the halving, which is happening on 420. But just last Thursday, we started talking more about the Ethereum and some of the options in that market. And we're talking a little bit about sentiment. And I saw this interesting tweet came out from Ryan Adams of Bankless. He asked his community yesterday, ETH bulls, do you still believe in the flippening? And I thought, JJ, we always talk about here about sentiment. Are the ETH bulls finally starting to capitulate, which may actually be a good time to be getting into this most hated trade this season? And then I saw this on the block that ETH options point to bullish market sentiment for end of April. So JJ, tell me, is Ethereum the sleeper trade for April? All eyes are on Bitcoin for the halving.
It's hard to believe, isn't it, that ETH has become the most hated trade in crypto? But there we are, last week, it seemed like everybody was maximum bearish here at the lower end of this Bollinger Band. And then what happened? We snapped back to the highs. It just never fails when you look at the market sentiment of things, in that people tend to be maximum bearish at the worst possible time and maximum bullish at the worst possible time as well. So we see that kind of natural snapback, and now it's consolidating here. We'll see what tomorrow's CPI has, but I think it looks extremely bullish, and there's just a whole lot of headwinds coming up that could flip this narrative rather quickly in ETH's favor. I see it outperforming, at least here in the near term, possibly outperforming even against Bitcoin in the short run.
Now, the Solana ecosystem has got heavily bid up because of all of the great meme coin distribution on there. And all the shenanigans. And I think you called it, you said that Solana has already topped against Ethereum. Do you still believe that to be true?
Yeah. I mean, look at this. Let the market tell you, right? This is it's clearly lost its uptrend. It's breaking down now. ETH has a lot of positive momentum, and it seems like Sol has exhausted its catalysts for the foreseeable future. Like, given you have to think of the size of that meme coin mania that's happened over the past few months, and the Ansem mania. Great trades, not knocking it. Very well done. Like, everybody made a whole lot of money, but at some point that reaches a point of exhaustion, and I think that was clearly over the past few weeks. We had that kind of euphoric candle up. I actually tweeted this out on the exact day that looked like the Sol ETH pair was topping. I didn't know that exact day was going to be the top, but you see those signs of everybody saying ETH's dead, Sol's going to flip ETH, and there you have it. Market just falling back to reality. And I mean, if you ran that trade for a long enough time, I think if you didn't switch already, it's time to jump ship and rotate some, because it's pretty clearly top tier from a technical perspective.
All right, Captain. Everyone needs to get off the Solana train, move on to the Ethereum train.
I think also that exact day too is when they launched Sol options on Deribit. So that's another thing to be aware of. Is then all of a sudden people could sell their upside, right? So
yeah,
people were just holding Sol, and then all of a sudden it's like, oh, I could sell a whatever $250 call and extract some yield off it. So basically, this whole thing that's been holding ETH down is people taking yield against it in the form of options, and now Sol's getting that effect. So be careful what you wish for with too much attention, is it brings about the risk-free yield trade, which can be negative for price.
Well, very interesting that that I think Ethereum has been the most hated trade this cycle. It's topped against Solana, and I feel like it now maybe has room to run. So I want to get into that when we talk about positioning later in this conversation, but let's transition and talk a little bit more about the market. We can talk about King Bitcoin right now. You know, I was looking at ETF volumes yesterday. You know, last week was positive on net inflows. Yesterday had another big sell-off with GBTC selling off 300 million, negative net inflows of 200 million. And yet we're seeing Bitcoin up to 70,000, Ethereum's up to over 3,600, and Sol, you know, as we're talking about 175. I guess, JJ, as you look at some of the data, specifically in the options and perpetuals market, how is the market preparing for the halving, which is just, I think, under 2 weeks away at this point?
I don't know if it's necessarily like, I think that might be a red herring a bit. I think it's just kind of, if you look at these technicals, Bitcoin's very coiled, right? Like, it's been in this consolidation range. And we pointed out that volatility, I mean, obviously it's higher, but anytime you're in a bull market, volatility is going to be naturally higher. That's just kind of the rate of change inside of a bull market. Is Bitcoin's historically like a 100 vol asset. And right now, if we look at the IV term structure, we see it throughout April. Currently, I think tomorrow's expiry has an IV of 65, and then you see it rising here, right? There's a steady slope up to 76 in June, but by the end of the month, post-halving, we're at 73. So you're going from 65 to 73. So the market's preparing for more volatility, and that basically syncs up with what you see on the charts here as well, right? We've been consolidating around this 50 RSI mark on the daily. And again, we're kind of in this tight range, and it seems sooner or later, like, we came down, retested the lower end of the Bollinger Band. Now we're retesting the higher end. The XY is also very coiled. We have that kind of crucial inflation reading tomorrow. It just seems like the market's preparing for a big move. And you see that expressed in options as well. We point this out yesterday, some of our subscribers, just how many out of the money puts and out of the money calls. You can see that here on this chart have been entering into position over the past week. So you see a lot of these orange lines are puts. So basically anything below 66,000, 60,000 puts are seeing a lot of action. And then also out of the money calls, basically 71K through 80K. Again, a lot of action there. There's been large buyers of deep out of the money calls for expiries. So yesterday there was a large December 100K call buyer, about 6 million worth of premium went into that. And then today there was a March 28th, 2025, $200,000 call buyer, and they put about 2.5 million into that. So take that what you will. You never know why people are placing these trades, but that seems to be a directional price bet over time. And people are seeing these levels as like, okay, Bitcoin made an all-time high. It's consolidating. If it's going to make a rip higher, it should be happening here in the short run. It seems like that's the way the market is currently positioning itself.
So the smart money continues to be on the side of we don't know if it's going to break up or down. As you said, we're coiled right now. We've got a lot of pressure building up in this system for some volatility, but we don't know which way to go. So perhaps people are just hedging in both directions.
The halving is it's just a perfect time. Like the way everything's kind of playing out is we've been consolidating for a month now, right? So in a bull market or any market for that matter, price typically doesn't stay in a range for longer than a month. You see a kind of breakout in one direction or the other. Then you add on top of that tomorrow's CPI, the halving narrative. There's a whole lot of things that can just add juice to this price action, which already looks like it wants to move. So all of the kind of stars are aligning for a high volatility break here in one direction or the other. We'll just have to see how it plays out. But the options market's preparing for volatility. You look at the perps, people have been completely washed out of positions over the past month. Open interest has fallen dramatically if you want to look at that chart. So obviously we had the Ethena trade come on over the weekend. They bought a whole bunch of spot Bitcoin. And I think a lot of this open interest rise over the past few days could be attributed to them obviously adding a couple billion in short open interest there. So that's kind of a net wash. But if you look at these funding rates and how far open interest has fallen since the highs, it's pretty dramatic, right? So everybody that was trying to play that range, playing for another breakout in one direction or the other, basically got washed out positions. Yeah. And that allows price to expand. Now you don't have that friction of too much people holding leverage in one direction or the other, and price can find its wherever it wants to go over the course of the next couple of weeks.
Well, and I did notice that when I was looking at the open interest this morning, that the long short ratio, which, over the course of the last several months that we've covered, it's gone as high as 60-40. It's now closer to 54-45. So it looks as though the shorts have kind of built up, taken some ground from the longs.
Yeah, that seems to be, the market's very negative on Bitcoin from here. It seems to be a lot of disbelief, whether it breaks up or not. We'll have to see. I think that ultimately depends on tomorrow's macro data. But apart from that, I think it looks great for a leg higher. Like if it were to go higher, this is how I would expect it to look, is basically everybody giving up on it and throwing in the towel on perpetual longs and just getting chopped up into pieces over the past month. And that's basically what the market's delivered. This is kind of.
Well, I want to get a take and a read from Mr. Ben Lilly, no pupils. There's been a lot of people that are talking about this being the top of the cycle. So from a sentiment perspective, people are saying, well, I'm starting to have friends come out of the woodworks and ask me about coins. They're starting to say that these are the, here's the new token to skyrocket. And I think Vinny Lingham, who's an OG in the space, the founder of Civic Key, said, these are the signs of a top. I've seen a couple of other analysts kind of echoing the same sentiment, saying, this is a great time for a pullback. Ben, what's your perspective here on how much those social signals are playing into this actually being a top, or whether or not these reads really are just false signals that people need to put it into context of a greater movement?
I just hear those things on the timeline and just choose to ignore it. I think Keanu Reeves is probably the good meme here, where, if somebody wants to say 1 + 1 is 5, like, okay, that sounds great. Okay, I'll just keep going on with my theory here on the cycles that play out. They keep rhyming every time. I don't see why this one is going to be any different at the moment. All we're doing every cycle is accessing a larger and larger moat of users. And that's what we're doing right now. And we're just getting started. So, Vinny, he's innovative. He built great products. Civic was a great product. I think it was a little early for its time. If he were to go ahead and launch that probably in a year, it'd probably have a lot more success, but the man has definitely had a lot of success, and he deserves to be respected. I just don't think he's actually in the trenches anymore, day in and day out, trying to analyze markets and trends and try to go ahead and play that game, if you will. So as far as hearing those things on the timeline, people seeing memes happen, like, I do think, if we want to look at a large cycle having mini cycles within it, sure, the mini cycle has kind of come to a close, if you will, but it's getting ready for one of the larger ends of the next run. So we see JJ's chart. And I'll pull up the same Bitcoin chart because there's one point I want to make here. When we go ahead and just kind of look at what a trader would be looking at in this pattern, as far as on a daily close, the way that it closed yesterday, which was above this kind of local high here.
Hey, producers, do we have the right chart pulled up? I think I'm seeing the ETFs.
That's my fault. Let me share the right tab here.
Okay. So I can't
got
blame the
now.
producers. All right. We won't fire them.
Can't blame the producers for everything. I got to take some of the credit.
Okay.
On being the air here. So this daily close, just being a little bit higher than this local high over here, but lower than what we saw as far as the all-time high. It's a little bit of an indecision point. You got the higher lows forming on a longer time frame, and you kind of have resistance building up here. Like you kind of have this setup that it needs to go ahead and expand, right? We had this consolidation taking place. We're starting to move into a narrower range. We need kind of an explosive move one way or the other. For anybody that likes to look at chart patterns, you kind of have this horizontal resistance. So if you get the breakout, be to the upside. And at the same time, I went ahead and ran some back tests yesterday looking at what happens when funding rates accelerate at the pace that we saw over the past few days? What happens when open interest accelerates at the same rate, along with a couple other things? And they do tend to be, even when it comes to like which demographic of buyers exist in the trade book, seeing all these similarities from a historical context, it does lend itself to be a local top. But at the other end of the spectrum, which I would say happens around 20 to 30% of the time, price accelerates to the upside. So you can kind of think of it as a squeeze, which what it tells me is, either we are at that local top or there's going to be a lot of people wrong and price will accelerate faster than the market expects to the upside. So look, I'm going to guess JJ might talk about straddles. I don't know if he will. We didn't have the discussion beforehand, but that might be something to consider as we see this range consolidate.
Yeah.
Okay. Just to kind of
been laid out there. I just think that we're preparing for a large move out of this range one way or the other. And I think that largely depends on what happens tomorrow through the end of this week with the macro data.
Well, I want to get into outside forces in a minute, but just to cap this, really, I think it's be the Keanu Reeves, be the surfer, and just allow these kind of comments to just sort of roll past you, because I think some of these people are incentive to just talk, right, and without having necessarily a deep, sophisticated look on the market, right, and some of the social cues, which are important to look at over time, can give you a false signal at times, right? So, and frankly, this is a very odd cycle. We know it's an odd cycle because we have brand new participants. We've been talking about it for months now on this show about the way the ETFs change, the fact that we now trade more and we have to look at the trading coming in from New York, the fact that we have to look at all the pools of capital coming in through the ETFs. If you choose to ignore that and just look at crypto Twitter, I think you're missing part of the story. Okay,
you have to also focus on where that retail attention was going. Like, was it on BTC? Was it on ETH? Not necessarily. It was mostly on Sol, and we're seeing a deep correction in Sol currently. It looks like that momentum's at an end. So yeah, if you look at it that way, you could say the retail trade is over. But does that mean that BTC is top tier? Remains to be seen. But
and as far as user adoption, this cycle is not about getting more retail at the moment. That's an exhaustive stance that we keep seeing on crypto Twitter, which is retail's not here yet, or retail is here yet, or we don't have an app for retail. Like this cycle isn't really about that. This is about widening the moat for kind of existing infrastructure, the legacy financial system. This sort of, if we're going to look at the exhaustion of demand, it's not happening on the retail side this cycle. It's going to happen by larger entities. So I would just focus on that.
There you have it. Well, let's move on. I want to talk about outside forces because those seem to have a bigger play. We just talked about sort of what this cycle is about. Ben, you put it at your perspective. in terms of price action, I think the Dixie inflation, they're going to have a massive play on how high this cycle goes and where the local tops are, and potentially even getting some really odd scenarios later on in the year if we had a recession, we had a liquidity crisis. Let's get into that. But before we do, again, I want to say welcome to everyone who's joined us today. I saw a few more Lasers JV joining us. Welcome. Love to have you here. And we're going to be talking about options in just a little while. I think JJ's already covered that a little bit. But if you're interested in starting your options journey, definitely check out CoinCall. Link in the description. CoinCall is a great exchange with an elegant interface, competitive fees where you can be trading spot, perps, and of course, options of all the major contracts. JJ covers this in his options videos, his training videos, which are just top notch. And from my money and my words, of course, I'm a friend of his, but some of the best content out there, because it's not just about how do you execute, it's how do you think about a trade? How do you actually look at a strategy? And that's what JJ's offering in all those videos. It's a great place to start if you're looking at doing paper trades. As I've talked about before, you can do those literally on paper, or you can actually start running some of these trades now when you find some cheaper options as you start to become more prepared, because the big trades, the massive ones, the ones that are going to beef up that portfolio of yours, they're going to be happening later in the year, and you're going to want to be prepared. So check that out. All right, JJ, I want to bring us back to outside forces. People don't want to talk about in the crypto. They just want to talk about Wi-Fi hat. They want to talk about crypto memes. That's great, but it's about the liquidity, and it's about the outside, whether the Dixie is going to break the backs of all the risk market, whether or not it's going to give back some joy. I looked at the Dixie this morning. It was trading at, where did I pull this up? 103.89. Tell me, what are you expecting from the Dixie this week, as well as what you're looking at from a CPI print that's coming out tomorrow?
So we'll have to see. Obviously, we've had a large correction here since last week's high. It's been fading. And last Friday, it was an interesting price dynamic. Ben and I were discussing about this, is that we had kind of every narrative possible for why DXY should go higher. And then it failed to make new highs. It kind of came up here, back tested, and then dropped back down. Now it's currently resting basically right on the 50-day, and the 200-day is not far below that at 103.80. We see it's sitting right on 50 RSI, which you pointed out a few times on the daily and weekly charts here. That 50 RSI mark is pretty crucial in how it performs. So it's kind of back testing that, and then the move from here typically leads to large movements in Bitcoin. So again, there's just kind of this correlation or confluence among factors where everything's lining up for a big move here in one direction or the other. So I think it in large part depends on what those prints will be tomorrow. I don't really have too much of an edge on what the number will be, but I know what price will look like if it goes one way or the other. We're either going to see Dixie screaming back to new highs here on this chart, breaking above 105, and in which case I think that's obviously very bearish across all markets. Like, it just won't be Bitcoin affected by that. I imagine there will be some severe liquidity stress that comes across equity markets. We'll see these interest rate futures drop further, which indicates higher rates, and I think the market could be in some turmoil there. On the other hand, if things come in favorable, we could see Dixie break down and start to make another move back towards sub 100, back towards this yearly open level, which would be extremely bullish. Like, the fifth breaks down from here, that's basically your fuel for 85 to 100K Bitcoin and the bull market we've all been awaiting. So pretty crucial day coming up tomorrow into this week. I think Dixie's coiled up for a big move, and Bitcoin's going to react to that in the coming days.
Ben, I want to bring you in here. We've been talking about this Dixie for, obviously, I think all of Q1. Now we're into second week of Q2. It feels as though we've been waiting for Dixie to really print something that's going to give us an indication one way or the other. Hasn't happened, so now we're waiting again. Now we've talked a little bit about rates, and we've talked a lot on the show about expectations. So I guess I want to see from your perspective, are you seeing anything that's starting to give you an indication that some of the ideas that we've had from a liquidity crisis perspective to a market adjustment to higher rates for longer, is any of that starting to come to fruition on your end? Are you starting to see signals that that's the case? Or are we still just in a waiting pattern, waiting and seeing what the Dixie does?
I think there's one perspective that I'm starting to see percolate a little bit to the surface, which has to do with CPI tomorrow. And I don't have an edge one way or the other, whether it's going to be a hot or not print. I was going to look later today to kind of hear what everybody's take is and then draw my own conclusion. But what I do see surfacing is kind of the discussion around employment, because Powell has made mention that that's kind of one of his main criteria at the moment for deciding what to do moving forward. And there's a lot of discussion that employment is not as strong as it might seem, and that kind of this, anybody that's on X or Twitter understands that there's a lot of kind of, I guess, immigrants coming into the United States, and they're taking different types of jobs. And I've been seeing some stats showcasing just like how many jobs have been taken by that demographic. And so that kind of creates this kind of false pretense of how strong employment really is for really the population that's probably going to be driving like kind of housing prices and commercial real estate and other areas of the industry. And so what I'm almost sensing is that the market's going to call a bluff on inflation, because you do have commodity prices kind of eking up higher. And really, it's just the market's trying to say that, look, it doesn't really buy it anymore. And we're going to have a little bit of a repricing at some moment soon.
When you say the market doesn't really buy it, they're not really buying whatever the inflation numbers that are being reported by the Fed. Is that what you're saying? They're not buying?
Correct. Like if inflation comes in, that it sort of kind of remains steady, that it's not going to really buy it anymore. Like we understand, there was a Subway picture that said, what was it, like $6 for 6 inches, when it used to be like, I think 20 years ago, it was the $5 foot long. And so you kind of see those things happening more and more. And it's almost like the market wants to say, like, look, we're tired of this game. We don't buy it anymore. Like, here it is. We're going to move. The market's going to move. It's going to basically make this price adjustment in some capacity, and it's going to force the Fed to do something, because it's really just been sitting there just deciding to sit on its hands. It doesn't want to do anything proactive. It just wants to be reactive. So it's waiting for that moment to kick. And I wouldn't be surprised, and this is kind of going back to, I forget who made the joke yesterday, but it has to do with the fact that why are we not discussing the possibility that the Fed could just potentially hike? Do I think the Fed's going to hike? No, I don't. But I do think there should be a group out there at least discussing it. I know that sounds silly, but that just creates better market expectations moving forward, just to have all possibilities out there. So if we're going to look at an event, and I know CPI hasn't mattered too much to the crypto market of late, but the way the Dixie's moving, the way that Bitcoin's sort of coiled up right now, that can go either direction. This might be one to really pay attention to.
Yeah, and I want to put a little bit of detail around that. If the Fed has to hike rates, that prevents, most likely it means that the banks and the reserves are going to get better rates, perhaps with the Fed, rather than being loaned out, which means less money creation, which means less liquidity. So, I mean, that's kind of the long tail of what they're looking at there, to see how that relationship plays out. I'm curious, all those who are in the chat, love to hear from you whether or not you believe the inflation prints and what you guys are seeing in your local markets, whether inflation is starting to perhaps subside, you're hitting some stability, or it's continuing to run hot, which I think is really a lot of the debate at various levels, right? The end consumer is sitting on saying, listen, I'm hitting the Subway, I'm going to the grocery store, things aren't getting better, I'm looking at buying a house, rents have gone insane, and those haven't changed. Versus sort of the macro numbers that the Fed is trying to manage. So just to cap it here, we're looking for Dixie to finally break so that JJ can get off of stuck on Joker, finally give us some signal and some print of where it's going. And we're also continue to look at to see is the narrative going to start changing with the Fed around again about, well, inflation is maybe giving us reasons that we have to think about changing our posture on whether or not we would actually raise rates. Again, I'm curious if anybody is looking at that here and if they have a different perspective. But outside forces are definitely going to play a big role here, especially as the larger players are coming into the market and if they have access to these vehicles, and they're going to be expressing different trades on crypto, they're going to be looking at some of these other factors, probably more than the native crypto people.
To that point, I just want to share this one chart real quick.
Yeah.
It's one of the biggest ironies in markets is that you see the dollar as kind of rate expectations get priced into the market and the dollar gets stronger, oil goes up. So there appears to be like some kind of counterbalance here where oil supply decreases as the dollar gets stronger. I'm not sure if that's a geopolitical thing or what, but it seems like, ironically, a stronger dollar leads to higher inflation. So if they're actually looking to bring inflation down over time, if you just look at this correlation, what you would actually want is a lower dollar. Because just based on this correlation, the dollar drops, oil will probably drop along with it due to whatever kind of agreements they come to with these oil producing countries where it's like, hey, we'll give you access to cheaper capital if you just release more oil and let us get these CPI numbers down so people don't revolt. I don't know if that's what's going on, but looking at this correlation, that it's hard to deny, right? Like,
and you go back, zoom out, JJ, like this hasn't been around.
No, it's a newer thing, right?
Yeah. It's very new.
So typically you see like 2008, obviously oil went ballistic because the dollar was trading at 70. And then you see basically since 2021, here's where this correlation really kicked into high gear is post-COVID. As the dollar got stronger, so too did oil. And then when the dollar finally fell off, we saw oil finally top out and come down in 2023. And then when the dollar was at the lows last year, oil was at the lows. So it may be in their best interest, ironically, if you want to get inflation down, you might have to actually lower rates. As counterintuitive as that sounds, that seems to kind of be the landscape that we find ourselves in here. So it's something to keep an eye on, that it might be in their best interest to actually lower rates for lower inflation, as crazy as that sounds.
Yeah.
Well, we're going to see exactly how they play it out. As has been noted, the Fed wants to be reactionary, not necessarily leading. At least that's been their posture for a while. So we'll have to see how they react to this TPI print that comes out. And of course, I think going into the rest of Q2, how are they starting to position the narrative for the rest of the year? Okay, well, I want to use that as an opportunity to talk a little bit more about positioning. The question I always have on my mind is this a time to sit on your hands, or this time to actually get into some trades? Last week, we started talking about the most hated trade in crypto, and we really got a little bit more into Ethereum options. I know at least one person mentioned on Twitter that they were able to play some options using a little bit about what we heard today, or at least in our show, and it went quite well for them. And so that's very good to hear.
Shout out Don.
Shout out to Don.
Hey, Don.
But I want to hear a little bit more, JJ, from you about what you're seeing from a positioning standpoint, from an options perspective, and then Ben, I'm going to come back to you as I always do, talk a little bit more about maybe some of what you're looking at outside of options from a trade perspective. So
Yeah,
JJ, please let us, walk us through what you're seeing. Are there opportunities this week? Are you waiting for the CPI print to come out to really see a flush out on the option side? What are you looking at?
There's a couple ways you could play it, but I think anytime you see things as tightly coiled as they are now, you want exposure to volatility in both directions. And I think the way that I'd be looking to express that would probably be something like April puts versus deeper in the year calls. So like we were discussing, there's obviously some whale interest in December calls. And as we've pointed out time and again, you kind of want to follow those bigger players. They probably have more of an insight into price than we do. So if you look at April 26th, you can see these puts at the lower end of the range are extremely cheap relative to the move Bitcoin can make in case of a liquidity crisis or anything that drastic. So you could buy basically puts 63,000 and below, and these would protect your downside risk. Like say we get a crash to 50,000 by the end of this month, and you own these $63,000 puts. Well, those are worth 13,000 now, right? Rather than 1,400, and then you also get the IV spike that would accompany such a move, and you'd be in pretty substantial profits on those. And then to keep your upside, you could go out anywhere from June to December. It's crazy because these premiums are rather high, but I think you want to take a risk here and have some exposure to it, whether that's something 80,000 and above. If you want to go to December, you could play those 100,000 call options that the whale was buying up. See how they obviously trading around 14,000 now. So you have to be prepared for quite a bit of risk, but that's markets. Is that if you wanted to wait for the possibility of a downside move to get a fill on those, you could, or you could take the risk now. Because I just think that the high volatility move is coming in one direction or the other over the course of the next couple of weeks. And I think it's going to be driven by what we see tomorrow. And it's pretty rare that you see these setups where you have DXY tightly coiled, Bitcoin tightly coiled. It just seems like a larger move is coming. I think you want to play that with volatility in both directions. So straddles, I would say anywhere between May or April and May for puts, and then June through December for calls. And I think you'll find yourself in a pretty good position. And also, if we get that washout, like say price does crash, that gives you the opportunity to buy later in the year calls at a cheaper discount, because in the event of a liquidity crisis, we know what the response to that will be. Ultimately, more liquidity injected, which will lead to higher prices, and you can buy up some cheaper calls if we do see that large washout. So I think you're just positioning yourself well with a straddle in this scenario.
So JJ, that is from a Bitcoin perspective. What about the most hated trade? What about Ethereum? Is it a similar type of playbook, looking at near-term puts and longer-term calls? Yep. Or is there something else that perhaps you're looking at from a Ethereum point of view?
Yeah, you could run that same play with ETH. So I think May is the date floated for the ETF. So if you want to buy some puts, say like these 3,000 puts are 145. So in case we have a liquidity crisis or that ETF creates a crash, you have protection below 3,000. And then you go out to later in the year if you think ETH is just absolutely going to rip from this point. You go to, say, December, buy some 4,000 and above calls and just hold those and add to them in case of a larger washout. I think any kind of play like that where you have longer dated exposure to the upside, short dated exposure to the downside in case of a black swan event or any kind of turbulence in the market, I think that's a good way to play it from here.
Well, and actually, just to really hit on that a little bit more, we were talking, I think, offline before the show about the fact that the two characters, James Seifert and I'm drawing a blank on the other gentleman's name, but they're the ones on crypto Twitter that are always talking about the ETFs. And they were very correct in terms of the BTC ETFs. They become very negative on the ETH ETFs coming out this year. In fact, I think one of them said that BlackRock is going to get its second decline out of all the ETFs it's ever applied for. Does that present a unique opportunity to play this market?
I think it's going to cause like you'll see a sell-off if they do announce like, hey, this ETF's been denied or delayed, whatever. And that'll ultimately be your best risk reward entry. Like you see that washout whenever it comes. You could basically buy that, know that the ETF is coming down the road, I believe. I think it's probably inevitable that we get an ETF sometime within the next year and a half. I don't think it'll necessarily be this year. But again, that gives you more time to front run, like we already saw with Bitcoin. People hated Bitcoin before the ETF became an inevitability. So let's just look at the 1 year chart, right? Like basically this candle here in late October after the SEC case was won was when it became an inevitability. But you look at the price action before it, it was just kind of chopping, right? Like even so BlackRock filed in June, we had that large candle up and then people hated it in this whole range. And I think Ethereum's kind of in this similar range. If you were to zoom out on Ethereum, what it'll look like over the next year or so, I imagine it's going to look like this. So
just I want to dial in on this just a little bit. So if we're expecting, you've got some of the people that perhaps are closer to the ETF knowledge, they're saying we don't expect this to happen. The market hasn't necessarily priced it in. Maybe there's a little bit of people trying to catch the opposite side of that trade, but that's assuming it does get denied. And then the big one is in August, where BlackRock's ETF is expected to have a decision. Let's assume that gets denied. You're expecting a sell-off of some kind, and that's the entry point. You already have your puts for perhaps you've already placed those, and then you're waiting for that sell-off to then go long with some calls.
Exactly. Yeah, you just add to your long exposure once the worst news comes out. Everybody that could possibly sell will have sold, and then you basically you've run out of sellers at that point. You basically have kind of an exhaustion event similar to like the FTX collapse, right? With Bitcoin, is that you had all that selling take place in a single day, and then what the price do? It just kind of stabilized, and then ultimately began its expansion upwards. And that's probably what's going to happen with ETH is you have some kind of puking event. ETH BTC probably drops to new lows, and that's probably the lows forever. At that point, once you have everybody capitulate on it, there's nobody left to sell, and price can by law only go up at that point. And I think, like you see, BlackRock's already deployed 100 million on ETH or whatever it is. Like whether or not this thing gets an ETF this year, that's almost irrelevant to me. I think we all know where it's headed long term. I think there's going to be more adoption of it. There's clear use cases, and I think people will adopt ETH in the future. I believe in it, and I think it's going to provide some good entries if people give up on it.
I mean, that move yesterday, like I think that was the result of the SEC meeting with some of these potential ETF providers, and that meeting alone moved ETH, the Grayscale Ethereum Trust, which is trading at like negative 20. It was like 25% negative NAV, and I think today it's almost closer to negative 20. So the fact that it just closed that much within a day just speaks volumes of like when this move decides to go, it's going to go.
Yep.
Well, the hooded trades are the good trades to be
You
playing.
can get an entry on this like anywhere below 24. I think is a good buy for ETH if you're lucky enough to get it again.
Well, I want to ask
up rapidly, and then
I'm going to ask Ben a little bit about that. About that trade. Okay, so just to summarize here from an options standpoint, definitely looking at puts over the next couple of months, looking at calls further out, and that happens both for Ethereum and for Bitcoin. Again, I want to do a shout out to CoinCall. If you're interested in starting your options journey, definitely check out the link in the description. That's the options chain that you were seeing from JJ. That's coming from CoinCall, and that's a place where you can place all these trades. And now is the time to be setting up that account so you're ready to actually play those, especially as we get into next year, because as JJ and Ben were just alluding to, we're going to have some fireworks. It's going to be an exciting time. You're going to want to be able to do that, place those trades. And again, it's got an elegant interface, competitive fees, what you need to start your options journey. All right, Ben, we're getting to the end of the show. I want to ask you, we were just talking about Ethereum, ETH. I think it had a 16% jump spike yesterday. You've talked on the show about looking into going into that. When I looked at the NAV to premium discount this morning, it was still very juicy. I think it was still above 20% even after that jump. Juicy. So is that still the play? Is there something else you're looking at?
Yeah, I mean, if you got an account, a brokerage account, like that's a nice vehicle, at least for the time being. But the area I'm looking at, I like to think of it as like the third catalyst getting ready to hit Ethereum. We had the meme token craze that took place. I think everybody that's playing that craze has come in. They tried to double down as price retraced, and they're probably out of dry powder at the moment. So the market needs to sort of go through a wealth creation cycle again. And I know I keep just beating this dead horse at the moment, and the market thinks it's dead as well, which is Ethereum. And if we go back to 2017 and we had the ICO craze and everybody needed to buy ETH to go ahead and invest in these new projects that turned out were 99% were probably vaporware. And I'm not trying to go into a Travis Kling discussion here. That was kind of 1.0, if you will, of Catalyst. And then in 2020, we had the food token craze, if anybody remembers that. We had yams in the pickle jar and all these things that where it needed to go ahead and bootstrap liquidity, bring tokens onto the protocol, and in exchange, they would go ahead and give you tokens for that liquidity. And then there were a bunch of vaults that got created, and it would essentially aggregate all this liquidity to go farm all these various tokens. We even had like Harvest Finance, I think was a protocol at the time, and still around to this day, I believe. And I bring up a chart of yams, if anybody remembers that project. And this is looking at yams to ETH, and then the price of ETH USD around the end of 2020 and early 2021. If you were to go ahead and accumulate yam and move it right into ETH, that was pretty much your play at the time. And if we fast forward to what's coming around, we see that this ability to create a layer 2 and the discussion of VCs wanting to create layer 2s, and everybody's scratching their head wondering, well, we don't really have that many users. Why do we need so many layer 2s? Well, the answer is because the token is going to generate a lot of returns for VCs. We don't need to be secretive about it. We don't need to be shy about it. This is just the way the market is. This is the truth. So what are they going to do if they're going to go ahead and launch an L2? They're going to run marketing campaigns. They're going to create activity on the chain, and they're going to go ahead and try to attract users, mostly mercenary users, with tokens. And so the way that you can kind of play that is you can go ahead and use the L2, or if they're going to go ahead and rent, validator sets from Ethereum, thanks to EigenLayer, and basically all the providers that sit on top of EigenLayer, like EtherFi and Puffer and all those others. This is where, my interest in Pendle sits. I know a lot of people kind of say that, oh, I'm all about the Pendle token. And I understand the Pendle token has just run like nobody's business, but I actually like the product, right? That's why I keep talking about Pendle. So it's a way to go ahead and really, this chart that I have on my screen with YAM Ether, it's to go ahead and play that third catalyst, which is when all these L2s start renting validator sets and rewarding people with those tokens. And so this is what I'm looking at as far as like the second half of this year and potentially into next year. I expect VCs to go ahead and roll out all these projects, create a lot of hype, issue a lot of tokens, and just really stack ETH on that chain. I'm also looking at Cosmos because they're getting ready to do a new narrative shift, and that's kind of a mid-term play, if you will. But
oh my gosh, I love it. We have like a 5-minute explanation of Ethereum where it's going, then he sneaks in Cosmos at the later end. It's like trying to just backdoor that one.
Yeah, it's like they have this narrative, and they were trying to do the same thing that Ethereum's doing now, but Cosmos was doing this years ago. It just essentially failed because there really wasn't that much, not interest, but usage in general. Where Ethereum's got the usage, they can go ahead and kind of rent the validator set out where Cosmos hasn't. But Cosmos is getting ready to do something different. I haven't dug into all the details of late, but I'm just kind of hearing rumors that they're getting ready to kind of shuffle things up. So I'm trying to see if it's of any interest, and if so, I'll report back.
Okay, all right. Lazarek says Cosmos always down. Definitely a little bit of shade thrown on that project. I want to come back, see if I can summarize, Ben, your point here. There's a long-term play on Ethereum. JJ, you mentioned that, right? If you look at the continued development on the Ethereum protocol, it continues, right? You continue to have developer mind share. You now have BlackRock, other institutional players continue to invest in that protocol. Ben, it sounds like you're echoing that sentiment and saying you're really looking at the longer term 6 to 9 month play where they continue to build out on these layer 2s. That's going to have demand for Ethereum. And that's going to create the play again down the road. We're not talking about over the next month, over the next, even quarter.
VCs are getting ready to just create a lot of tokens. They're going to basically be doling out all this wealth. And if you want to go ahead and get that share and then move it back into Ethereum, why would you not? And this doesn't just hold water on Ethereum. Like Bitcoin's getting ready to do something similar. I know like a year ago we were discussing ordinals, and I know that's kind of gone quiet because they had a lot of UX issues to go ahead and address over the last 12 months. And I think they've been making strides, and it's getting closer, right? But Bitcoin can have that same sort of kind of rejuvenation event taking place on its L1. So it's like you need to think of it as you want the L1 asset. So go ahead and just kind of farm everything else that's really giving you tokens, farm it, move it right back into that native asset, and just accumulate in that manner.
Okay, there you have it. You need to become a farmer, get a hat, get a hoe, get some overalls, get your Carhartt. I guess it is 2024. They don't have overalls anymore. Everyone's got Carhartt in their list of some country music. And we do have we have something special around farmers coming out over the coming months. Guys, I'm really excited to be announcing that. But that's going to wrap up our positioning on the show. And that's actually going to do this show today. As I close this out, I'm trying to pull up my chart, see where Ethereum, Bitcoin's still hovering around 70,000, Ethereum kind of the same. So we're a little bit flat. I guess everyone is waiting for this coil to be released. And we can see that maybe tomorrow with the CPI. So by Thursday, we should have a little bit more to share with everyone out there. But I want to thank everyone who showed up this week, showed up today. Love having you here. We love your questions, love your input. So definitely be back here every Tuesday, Thursday at 9:15. Ben and JJ, thanks for coming by, dropping the alpha. Always appreciate it. I've been telling you every time, make sure you have some dry powder so you can go out and farm, be it Ethereum, be it Bitcoin, or somewhere else. And until next time, this is Marconi White signing off. Bye.